We are back for another huge week in the markets. Nvidia has entered into a correction. Is it going to be going much further down? Crypto selling off like crazy. I guess the ETF excitement has worn off. We'll be discussing that and much more on Money Never Sleeps. Thanks for joining us today, folks. As we get going, do us a favor, hit that like button, subscribe to the channel, and remember that nothing we say is financial advice, so please do your own research. Kev, you had some great shows last week. We got some really good comments, some very helpful and encouraging feedback from the people about the fact that we don't know anything, which, you know what, we never really claimed to know anything, right? So if that's your take, first off, thank you for watching and commenting. It helps us with the algorithm. But yeah, if we don't know what we're talking about, that's okay. Then just do the opposite of what we're talking about. And then you should be just making boatloads worth of cash. But appreciate everybody for watching, for you covering last week, Kev. How are we feeling today? You know, tech, it's real heavy in the tech streets, man. Nvidia is just weighing on everybody. Every other valuation feels real heavy right now. Very weird times in crypto as well. We've seen Bitcoin briefly go below 60K, ETH hanging out just under 3,300. Some of the other alts getting absolutely trucked. But how are you feeling about everything right now?
Yeah, man. I think over the weekend I felt pretty good, especially I feel bullish in the sense that Tom Lee of Fundstrat said that we're going to 15K in the S&P by the end of the decade. I don't fucking buy that one bit, but I thought that was just hilarious and almost gave me more confidence in your theory of a lost decade, which I hope doesn't happen. But it's just like, all right, guys, what do we expect? Inflation to be up 3,000% the next CPI reading to get to that point? Who knows? But I did talk about last week, there's a lot of things that are broken in the monetary system. And I said that there's a good chance that we start to see those cracks after OPEX, right? OPEX ended on Friday. Ooh, everyone was in the money. Stock buyback window was closed the week prior, but everyone was able to push the prices up. Now we're seeing a little bit of a pullback. I shorted Nvidia last Thursday night. So I thought I got in a pretty good level. Just bought an ETF that shorts it. And, it's down 14% since the height of that move. So I'm feeling pretty good about that. But I'm also very excited to see what's happening in Bitcoin. Seems like we're seeing a lot of negative pressure, selling pressure against Bitcoin and alts. And, at some point, I think there will be a bounce. But the question is it going to be a dead cat bounce or is it going to be, the pattern that we were expecting? Was this a bull flag the whole way? I don't know. We're going to have to find out. As of right now, it seems like a bit of a fake out. So I'm looking forward to seeing what happens over these next few weeks. Once again, with the markets, you never know what's going to happen. You kind of just need time to tell. We're just going to make our best guesses as to what's going to happen. And again, nothing we say is financial advice.
That is for damn sure. We have a little bit of a slow week as far as news goes, at least early on. Things get fun on Thursday and Friday, but not a whole lot to discuss. We have some Fed speakers and they're going to give their regular jargon. I don't expect too much out of that. Later on in the week, we'll get the final Q1 GDP number. That should be a very telling for the next quarter. And then Friday, we get PCE. So big inflation reading on Friday. It feels like so much is baked into the upside right now, like the expectations from that most recent CPI, that if PCE comes in bad on Friday, watch out. Like that's a really important reading there. Expectation on that is for it to come down a little bit. The core, they're expecting a decrease of 0.2% from last month, 0.1% on the headline number. If it misses, let's say, God forbid, it goes back up or it just stays flat, I think we're going to have to really look at, because, right now we have 2 rate cuts baked into the projections at this point. If you look at CME Group, they're expecting 2 rate cuts. That's what the market has priced in at this point. Now, if it comes in lower, look out too. Like there's more ways for it to go be negative for the markets and positive, I think, right? Like if we see a flat inflation reading, that's bad for the markets. If we see it go up, obviously bad for the market. So important one on Friday. I wouldn't be surprised if we saw a lot of chop between now and then. There's not a whole lot that is at this point. We have elections overseas, but those aren't kicking off until later in the week. We do know that the maybe Thursday night is when things get weird with the with crypto leading into Friday morning, based on how the debate goes with Trump and Biden. I mean,
That's gonna be
I
fun.
yeah, the expectation is that Trump is going to announce his running mate, and a lot is pointing to it being Vivek. So I guess brush up on his policy and how he feels on things and how that could impact the markets. I know he's younger. I mean, he can't be any older than those two guys. So thank Christ for that. But could that impact the crypto market as well if Trump has a good showing? Who the heck knows? But it should be an interesting night. If you trade meme coins, I'm sure there are going to be some great memes that jump up from there. So get your rest ahead of Thursday night.
Yeah, I'm excited for Thursday night. I'm not gonna be able to watch it live, but I know the recap's just gonna be hilarious. At this point, it's entertainment value too. Sometimes things suck. The economy is not in the greatest place right now, so any way you can get your kicks and just have like a good old time watching Trump yelling and the mic just being muted. And then I don't know what's going to come out of Biden's mouth, but I'm very interested to see the crypto debate. I don't know if it's going to be Vivek. Like I know a lot of things are pointing towards him, but I think that type of like excitement to see who it might be is going to be interesting. I also think it's just like a really smart. I wouldn't say smart, but it's a really creative way to announce your running mate, right?
Yeah.
Because they're just going to show up. And he said that he hadn't even reached out to him. I think it was on Saturday when it came out. So I have no idea who it could be. I heard it was Glenn Youngkin, but him or Vivek, it'd be interesting to see.
I think he should do like a full on WWF style intro. You got the pyrotechnics, you got the music playing. I mean, if we're going to lean into this being idiocracy, like go all out here. Okay.
Yeah.
Just get present, Nacho Camacho or whatever Terry Cruz's character was in that movie. Let's do it upright.
Yeah, get some Macho Man Randy Savage type theatrics going in there.
R.I.P. Macho Man. Gone
He's the
but never
man. I loved
forgotten.
him.
He
All
was the
right.
best. All right. Anyways, on to better things. What else are you seeing right now? I know that you want to talk about Japan a little bit. That was the main
Yeah,
topic of your most recent video, but there have been more developments there. So why don't we go into Japan and then we can hit some of the charts. We'll start with Nvidia when we get to the charts.
absolutely. I'm going to pull up the yen chart right now because this is one of the crises that we are looking at out of Japan. One was obviously Norichukin Bank. I can't pronounce that bank to save my life. I don't think they can even pronounce it. That's why they're in absolute pain right now. But that was one that we were watching for a long time, but we didn't necessarily cover it on the show. But they finally announced that they're going to be selling off a lot of U.S. debt, also European debt, and that's problematic for not just Japan but the U.S. Fallout of that also just leads to more fire sales across the board, right? And then less U.S. debt that's being bought up. That means that the U.S. is operating deficit. They're going to have problems in the future. They're going to need more people coming back to the treasury market. That was kind of the crash run of what's going on there. But when we look at the yen, we're talking about intervention now 24/7. That's what the Bank of Japan announced that they're going to do. They said there's no reason that they should not be able to intervene. They'll be on alert pretty much 24/7 from here on out to make sure that the yen doesn't get too far away from the US dollar in terms of value. Last night, we got a double top of what we saw back in Monday, April 29th. So what was that, 2 months ago or so? Here we are back right there again. So pretty much everything that they spent to get this yen under control, selling off assets, didn't work. And it's right back to where it is. Now we're in a really weird predicament where we're probably going to see their hot inflation readings continue, which means that the yen's probably going to increase in value or decrease in value unless they start raising rates sooner than later. And this is just going to get out of hand. So they're pretty much just selling off assets in absolute pain. The one thing that hasn't happened yet, though, is we have not seen the Japanese markets necessarily react. And by that, I mean the Nikkei. I talked about this Nikkei being very similar to where it was in 1989. I think it is still very similar. And right now, the scary thing is when you're looking at the Nikkei, you're just kissing this 50 moving average. You're back and forth, back and forth. If it gets to the point where they have to sell off more in order to save the yen, and then they obviously have to start raising rates also in order to make the yen stronger currency against the dollar, get away from that 160 level, you're looking at a major dump most likely in the equities. This would be very similar if you don't want to go to the extremes of 1989 to 1990 of that Japanese bubble. Then you could look at, say, 2022 in the US, right? Maybe like February 2022 all the way to October 2022, where you are going to see some type of correction. It's just the inverse of how this trade would possibly work, right? So you'd probably see equities drop in Japan, and we haven't seen it yet, but we're on the 50 moving average. And obviously, if that's the case, we don't have a lot of support in between here. So we're probably coming down to like 36.7. Worst case scenario, 200 EMA at 36.2. But we talked about this before, once you're below the 200 moving average, it's more of a bearish sign that we're going to be seeing further price depreciation. And the thing is, these are all the fair value gaps that we've created since 2020 in the Nikkei, in the Japanese stock market. So we should really be concerned. I say Japanese stock market. I mean, I think Tokyo Stock Exchange. That's what it should be. But looking at this here, I mean, you're pretty much going all the way down to like 16.9, which would be from where we were at the height down there. It's 58% value that it would have to touch all of these. So you'd have to see this drop 58% in order to fill all these gaps. Is that impossible? No, not at all, especially when we look at the history of this market. And we can see that over the course of, what is this, 1990, 2008, 18 years or so, you can see that Japanese, the Nikkei has dropped significantly to the point where it was down about 80%. So these bubbles and these valuations really do happen. I think a lot of people just don't necessarily think that they can happen, but I think that these are the very similar situations where the only thing that we're missing from this 1990 scenario to where we are currently is that the Bank of Japan raised rates, and it was significant amount that they raised rates. But everything leading up to it, a weaker yen, we're getting to a point where valuations are just blown out of proportion. Inflation's starting to get out of hand, very similar to the 1990s bubble. I think that we are going to see a major pullback in the equity markets in Japan, especially if the yen continues to be problematic. That trade is going to cause the yen to get stronger, and likely maybe it gets stronger, but not to the extent that they would hope, just because I think that a lot of other currencies would probably lose strength to the dollar in that situation as well. So it's going to be really interesting, but we're going to keep an eye on it. Yen being around 160 is just, that should be scaring everyone that's in some of those banks over there. It's a big carry trade that could unwind. I think it's going to unwind sooner rather than later too.
All right, let's move from that over to Nvidia. It has entered a correction at this point, down 10, 11% from its recent highs. We saw, if you're on social media, if you're on Twitter, you're involved in the markets, you probably saw all of the big sales happening from some of the executives of Nvidia. Maybe it's them taking profit because they do have so many shares, and why not take profit at an all-time high? Maybe they're expecting something worse. I'm not going to we're not here to speculate on that. What we do know is that they sold shares, they took profit, and we're starting to see retail get interested in Nvidia. So we're probably due for a even deeper pullback.
Well, yeah, I think the thing that's really stupid, and I don't mean this that retail is stupid, but I think it's really dumb because of the stock split. A lot of people think that Nvidia can go back to $800. But again, we're talking about market capitalization. This is still I don't even know the exact number since it's pulled back. Let me go down here. Market cap, $2.96 trillion company, right? So for it to go to 800, you guys do the math. How much money would need to flow in? And it's quite a bit. So I think that this is a very misleading thing. It's also probably the thing that's causing retail to get invested, because it's like, oh, well, it was at 1,200. Now it's at 100. I could start buying some shares. It's like, yeah, you're buying smaller shares than what they were back then. But it's very much in a correction right now. It's down about 14, almost 15% since the height of that move at 141, which would have been what, $1,410 or so. If they didn't do the stock split, we're at roughly 1,200 if that's the case right now. But looking at this, where I'm looking for support is obviously in this range between 116 and 107.45, right? There's a gap down here. I think that needs to be filled. It's also kind of lines up with the 50 moving average. I think that's where we're going to find a good level of support. So we'll just mark this here. That is not exactly where I put it. There we go. I think around there might be an interesting level of support. I do think that this gap down here, though, at 96 is going to be very much so a huge level of support, right? That's going to get tested because you have 1, 2, 3, and this is on the daily, right? We're looking at this, and it, to me right now, because of how little support we had to the upside, it seems like it's going to come and test these two levels if there's nothing that causes the stock to rally once again, right? That's kind of the thing you have to watch out here. I felt a little bit more confident in the position that I took on Thursday night because I was seeing how we were seeing a lot of insider sell off. I think Jensen sold off $96 million worth of stock. It was an insane amount of people within the company that were just deciding to take profit, right? I think once we find out the major calls that everyone's very excited about that made everyone go super long on Nvidia close, I think that's going to cause a little bit of a frenzy to get out of the market. Maybe just because people are scared that there's not going to be as many buyers coming in. But I do think that we're just at a place where we're in a very overvalued, place in this company's in the market right now for this stock, and we have very little support, and it's like few and far in between, right? We got these two supports that I pointed out here, and then after that, you don't have a lot of major support till you get to around around $49, and then you have this major gap that's down here about $31, which would be around $300 if it wasn't the reverse stock split. So I think that there's a good chance that we could see some major negative days. I do think that a bounce is probably going to come sooner or later, but I don't think we're going to put in a higher high. As of right now, I'm kind of convinced that this is the height of the market for Nvidia. Remains to be seen, but we'll see if this is able to hold throughout the rest of the weekend into the rest of the month too. I think until July OPEX, which is the 24th or so. But I think there's definitely a case to say that Nvidia is in a bit of a correction, and we have to wait to see where this thing finally finds some support before we can anticipate any type of move to the upside.
Yeah, it's gonna be a weird summer. Like it feels like the selling started later than usual. And are people just going to take some time away? And are we just going to kind of like see that really boring chop in this range for a while? That's what I think is the most likely outcome. Maybe I'm wrong. Maybe we continue to see an even deeper sell off. But with the next Fed meeting not until the final day of July, and then no meeting in August, with the presidential debate later this week, but then, as far as I know now, nothing on the calendar for that until the fall. Do we just kind of see okay, everyone's just going to pause, not be too active, and we get that boring up and down, which trying to trade into that, like go enjoy your time, go pick up a hobby or some shit. Let's look at crypto right now. We're seeing pullbacks big time across the board. USDT and DC dominance are on the way up. We're seeing more and more people just getting into stables, getting away from the riskier side of crypto. Bitcoin still just hanging out just above 60K. It's going to go any second now. I mean, it already went a little bit, but now it feels like it's going to go and it be a sustained sell-off. It's oversold like crazy at this point, if you're looking at it on the daily, but it can be that way for a while. So your Bitcoin chart sure does look fun right here. You got your parallel channel going. You got your moving averages. It's now approaching. Is it the 200 is the yellow, correct?
Correct.
Yeah, it's now approaching the 200, already below the 50. Talk to me about what you're seeing with the structures here on Bitcoin.
Absolutely. So I think what we're seeing here is we thought this was a bit of a bull flag. I was kind of in the camp that there was a good chance we could go to all-time highs because we were oversold for a period of time and there was plenty of momentum to the upside going into this OPEX. However, before OPEX, we started to see a bit of a sell-off in Bitcoin and in some of the alts. Alts bleeding way more than Bitcoin. But the thing is, we lost the key level of support that kind of justified, well, actually two key levels of support that justified that push to the upside. Now we're back in this parallel channel. This could break to the upside. We can say that. But I'm more skeptical now, and I think there's a few reasons why. One, if we look at this on the daily, we just put in a new low. Compared to where we were in May. I think this was around 60,223. And obviously we went to about 59.7, somewhere in there. So that's a lower low. We're going to see how this plays out if we can get a bounce. Now, the thing is, I think what we're going to see is we're going to get a bit of a dead cat bounce. I think that there's a good chance that we could either find some support on the 200 EMA, which is around 57.9, 58. If we find some support there, we're going to get a little bit of a bounce, which would be logical. And then either the 50 or this parallel channel is going to act as a decent amount of resistance, right? I don't know if there's going to be enough buyers to come in. I did say that I think a lot of people are going to get liquidated in these next few weeks with Bitcoin if the price goes up or down. Obviously, they would. But I think right now, more longs got liquidated than shorts, if I'm not mistaken, because that's a red fucking candle. Right now we're under 60,000. So it's going to be interesting to see if this 200 holds. And if it does hold, obviously we're pushing up a little bit higher. If this doesn't hold, which would be worst case scenario, if you're long on Bitcoin, you're coming down to about 52,000, 52,500. So that's a big move. And then again, once again, you're below the 200 moving average. That's where most of the money is made for a lot of people who are shorting the market. You probably see a lot of liquidations there too. You might see a bit of a push up, but you might find some resistance on these moving averages. Right now, you're between the 50 and the 200. You're probably going to test the 200 just because you're so close to it, but I wouldn't be surprised if you test the 50 and you find that is pretty strong resistance. And then if we look at this on the macro, obviously this ends up being, let's look at this on the weekly. This turns out to be more of like a double top scenario, right? Right there. And then you get the reversal and you come down. And if we look at this, it's the even larger picture from the Coinbase chart that we have. I thought we were going to get there. Nope. We just put in a lower high, double top reversal coming down to the 50, this is on the weekly, which is around 51,000, which is kind of scary, right? Because that kind of lines up with losing the 200 on the daily. And then below that, we're looking at about 34,000, which maybe I don't think that would hold. I think we'd probably be closer to about 30,000 and 200 EMA on the weekly, which lines up right where Bitcoin started pumping ahead of all the ETF news back in December, January, somewhere around there when they were going to announce it. And it just shot up like crazy. I think it was January.
I'm very interested to see the Bitcoin ETF outflows over the coming days. This is a bigger pullback than we've seen since the ETFs really got going. Are people going to get spooked? Are they going to be like, you know what, there's too much uncertainty, I need to get out of here? Those ETFs not looking great at the moment. You would expect that to be the case. But the outflow numbers are going to be what I'm looking for. Or are people using this as an opportunity to buy a little bit more? Because if we get down into the low 50s, I mean, I'll throw more in. Like I'm playing the long game here. Like zoom out on that chart right there. Like, yeah. Yes, Bitcoin go back to the actual Bitcoin chart, but like Bitcoin, obviously down significantly from its highs. It's not an all-time high, but dear Lord, like it has had quite the run up. If you were buying earlier in the year, you've had a great return. If you've been holding for a long time, so it's just like, don't panic. Like, I guess not financial advice. I'll just say what I'm doing. I'm not panicking. Okay. I still have the Bitcoin that I bought 2 summers ago when I made my big buy, just sitting cold storage, just waiting. All right. Like there's nothing wrong with continuing to dollar cost average right now. I think that we're on the same page that we expect to see 6-figure Bitcoin at some point. I don't know if it's going to be this year, next year, the year after, but panicking right now and making hasty emotional decisions is a mistake. Okay. Like, are you going to catch, or, can you catch a falling knife? Can you sell it now and hope to time the bottom? Probably not. Let's just be honest. So using this as an opportunity to accumulate when we see a big red day like this, not the worst idea. I'll be doing a little bit of that myself. So if you're looking to day trade, probably not the right person to talk to. I know for a fact I'm not the right person to talk to. Let's just be real here. But if we really look at this chart, I don't know if it's going to be at 40K later this year or 80K later this year, but I'll continue to accumulate because that is what we do. And we wait and we are patient because the people who are jumping in now or are panicking now, let's just be real, they're not going to make it long term. But if you can keep your head on straight and not get emotional and not be overinvested, for the love of God, please, that's how we're going to win long term on this thing.
Yeah, I agree. And here's the thing too. I'll never tell someone, sell this, sell that now. Yeah, I'll tell you what I'm doing, right? And again, I have no Bitcoin, so this means nothing to me. I'm just someone that's looking to buy at a cheaper price and, hopefully get a really good entry. Historically, I'm looking at this chart, and every time we get up here, we do see a bit of a reversal. Obviously, we saw the 50% reversal back in the summer of 21, and we saw the fucking catastrophe that was 2022 in crypto. Or you can say that 2022 is one of the worst years in crypto, right? You had Three Arrows Capital, you had Do
Oh God,
Kwon, and
yeah.
FTX. Like, I mean, just having that much greed and euphoria and where we ended up, it's fine. For me, 2023 is probably the worst year in crypto because it was the most blatant with Tether, and it's just like, all right, this guys, you're building towards something, and we finally got to this level up here, with huge level of resistance, got a double top. If I was a betting man, and again, I'm not on this, I'm not going to play with crypto until I find a good entry point. I think that you're either going to touch this once again and find resistance there, or you're going to come down and over time eventually touch this bottom trend line. And if this does turn out to be a massive bear flag, then you're probably going to come into this little yellow area down here, which is where I probably will be looking to scalp some for the long term. Scalp, I shouldn't say scalp, to pick up some Bitcoin for the long term, 17,000 to roughly, 10,000, right around there. Because I think that's where I would be a buyer. I think that I completely agree with you that Bitcoin could definitely get to six digits. But if I'm going to accumulate, I'm going to want to accumulate at the lowest level possible so I don't have to worry about the volatility in the future, right? I don't want to buy at 30,000 and it can go up or down from there. I'd rather just be like, okay, well, if I fucked up down here, guess it's not that bad of an entry point still compared to where it is. But outside of that, we got to look at USDT dominance. And I talked about every time it touches this trend line, catastrophe ensues in the months to follow. March of 2021, we know what happens. April, summer, 50% drawdown. Then once again, here in October 2021, literally the height of the market, you end up with this bullshit up here where USDT dominance is just kicking ass into March. And then eventually it's coming down. Everyone's pretty much all in the market. And then here we are, March 2024. ETFs are approved and everything. And now we're starting to push away from it. Now we're seeing that Bitcoin's had a really good push to the downside since, that height. I'm not sure where this is going to take us, but I have a funny feeling that USDT dominance is going to continue to rise if Bitcoin sells off. Obviously, that makes sense, but to what level? That's anyone's best guess. It could be an absolute nightmare if it continues to push away from that trend line, which means that we're just going to see a lot more people rotate into stables, and not as many people will want to hold Bitcoin. That's just kind of the macro assessment of where I think we're heading. Obviously, Bitcoin dominance is much higher outside of the stable coins being included. I think we're probably going to see 57% once again be touched. It looks like we're extremely oversold on the daily. And, Bitcoin dominance could be a matter of two things. It could be a dead cat bounce where alts don't follow, or it could be, Bitcoin bleeds, but alts just bleed harder. I mean, if we look at the alt market cap right now, it's like a total 3. We're below the 200 moving average, right? We're forming a death cross in a matter of, let's say 2-3 weeks, or probably maybe even earlier if it continues to sell off. But you're below the 200 moving average. Yes, it is completely bloody and oversold. I would expect a bounce, but I'm not going to sit here and hold my breath and just be like, I hope these alts bounce here. I don't know if they will. I don't know to what lengths they will. And it's pretty simple for the reason why I think that. And here's total 2. You can see that it's holding on the 200 moving average. And total 1's probably going to test the 200 EMA fairly soon. Whether that holds, it remains to be seen. But I mean, you look across the board, Link broke out of that. Looks like shit. AVAX, absolutely nass. So on, I'm sorry, JWeb. Looks bad. Looks like it's holding on to the 200 EMA. So there's that, just underneath it. But a lot of these alts are just bleeding out a little more than we probably expected. Cardano, good luck. That's one I used to like. Just not going to buy it here. And then you got a double top at ETH. Now, the ETH ETF, if that gets approved, maybe you get a little bit of a bounce. Maybe that's the dead cat bounce. I don't know. But across the board, when I'm looking at this, there's a good chance that we're looking at just money moving from one to the next. I don't necessarily know it, or if we're seeing money run out. That's the other thing too, right? We're in a global dollar shortage, and we see that rates are still elevated. There's no new debt that institutions can borrow at a cheap rate and then throw into the markets and pretty much get infinity dollars off any return, whether it's a shit coin or it's an index or a stock. Just not happening anymore. So I'm excited to see what happens in the alt market more than I am with Bitcoin, just because I kind of want to get some cheap alts in the future. And I think there's definitely some, like, we have House on here all the time talking about ARB, optimism, ones that I think are going to be important in the next cycle. But again, I don't negate the fact that there could be a 60% drawdown in the entire market, across the board, both TradFi and crypto, before we start to see the global liquidity index start pumping because they cut rates. And then you start seeing all these institutions just borrow at 0% once again, very similar to how they did in 2020. So that's kind of my assessment right now of looking at everything. I think that's no different than how we kind of saw everything going into this year as well. Just a matter of time. And again, you can't apply logic to equity markets. You can only do it to the monetary system. So I'll leave it at that.
All right. That is going to do it for today's show. Appreciate those who watched. If you haven't yet, like, subscribe, grab a comment, maybe not a mean one. Like, we don't, you don't mean
I don't
mean.
care at this point.
Well, Kevin's dead inside. I still have some feelings left. But appreciate everybody for watching. We'll be back on Wednesday at our regular time. Have a great rest of your day. Stay safe in the markets, and we'll see you later this week.
RIP Hooters. Take care.
Oh.